Hi, my name is Cheryl Hanshaw, and I'm with the Greenville Financial Empowerment Center. And today, in conjunction with the Greenville County Library System, we are presenting how to build your credit score. Now, in the past, I have done some videos on understanding your credit score and understanding your credit report. So if you have not seen those, you may want to go back and look at those before watching this video, because I'll be building upon those concepts today. So one thing that I didn't cover in one of my previous videos was how can you get your FICO score? So the big thing is that credit scores are typically not free. So there are a couple ways to get a free score rather than having to pay for it. First, if you are in the process of trying to get a loan, like a mortgage or a car loan, and you're working with a lender, they're going to pull your credit report, and you can ask them if they can provide you with a copy of your credit score at that time. Many lenders will do that for you. Also, Experian is currently offering a free FICO score through their website, and so you can go on there and get it from Experian. But be aware that the FICO score that they use may not be exactly the same score as TransUnion or Equifax. And then finally, you can go to Discover Scorecard, and they also will provide you with an Experian FICO score for free. Now, maybe you have gone and found out that you have no credit score. That is a possibility. And that might be because you have no credit history. So if you have never had a loan, never had a credit card, never had any sort of debt, then you may have no credit score because you have no credit file. Another possibility is that you might have had history in the past, but you have closed accounts and have not had any recent history. And if that's the case, then you will not have a credit score, because a credit score is an indicator to lenders on whether or not you are a good credit risk based upon your history. If you don't have a current history, they cannot make a prediction on whether or not you would be a good risk. Now, you may be in the situation that you find out that you need to increase your credit score. Maybe you've been to a lender and they've said, we can't provide credit to you right now. We can't provide a mortgage or a car loan until you increase your credit score. So I want to go over some steps that we can take to do that. So first, credit is a future predictor based upon what you have done in the past. So the idea here is that we can always go forward with our credit score. Just because we have a low credit score or one that we're not too happy with right now doesn't mean that we have to have that for the rest of time. So you can't change the past, but what can you do going forward to improve your credit score? And we like to look at two different ways of this. One is credit building and the other is credit repair. You might have heard ads on the radio of companies that say that they're going to repair your credit, that they're going to boost your credit score. Those companies are dealing more with your delinquent accounts and trying to get rid of things off of your credit report that may or may not work. We like to look more at, let's change behaviors and let's go forward and build your credit score now, and rather than focusing on things that have happened in the past. First thing you should always do is check your credit report for accuracy. So there may be problems in your credit report. There may be duplicate transactions. There may be transactions in there that don't belong to you, or there may be things in there that are reporting incorrectly. If those things are inaccurate, they may be impacting your credit score. So simply going through, checking your credit report, disputing any problems may give you a pretty quick boost to your credit score if there are problems in your credit report. Now, the first step to building your credit is to, from this day forward, make sure to pay all of your bills on time. This is going to take 35% of your credit score is your payment history. So this is a huge part of your credit score. And the big thing here is things that happen more recently are going to impact your score more than things that have happened in the past. So if you've had bad experiences in the past, you haven't paid things on time, as time passes, those are going to impact your score less. So what we need to do from this day forward is to change those behaviors, begin always paying things on time, so that we can build that good positive outlook for your credit score. Now, you may be in a situation that you're like, I'm trying to pay on time, but I can't. So the big thing is, don't ignore it. Ignoring it's not going to make it go away. It's still going to show up on your credit report. But there are some things that you can do that may prevent it from showing up on your credit report. First thing, anytime that you know you're going to be late or that you're unable to pay a bill, call up the lender, talk to them. Many lenders are willing to work with you if you call them. If you don't call them, they don't know that you're in trouble. They might be able to work out a payment plan or adjust the due date or adjust the interest rate. The big thing here is, unless you ask, you don't know. So make sure to call, tell them you're having trouble and you intend to pay, but you just need a little help or a little bit more time, and see if they're able to work with you. Next step is to reduce how much credit that you're using, or reduce your utilization. This is the other big part of your credit score for 30%. So the magic number is to try to reduce your utilization down to 30%. So this is specifically talking about revolving debt, credit card and store cards. Cards that have a credit limit is what is going to affect this the most. So if you have a credit limit of $10,000 between all of your cards and you have $9,000 on all those cards, your utilization's at 90%. So start working at chipping away and paying down that debt to get it down as close to that 30% as possible. Now, if you are a lucky person that already has things paid off, then you might actually have to do the opposite. If you haven't been using credit, you might need to start using your credit regularly and wisely. Make sure to charge a little bit on your credit card each month and then pay it off each month. So that what we really want to get to is be able to use our credit cards for a temporary loan and pay it off each month so that that loan is interest free. We don't want to get hit with the interest charges that the credit cards want to charge us every month. So we want to just get into this, use it, pay it off. Now, if you have a credit card that you're not using, you also need to be careful about closing it, because your first impression may be, it's better if I don't have that credit card. But if you close that credit card, you're actually reducing your total credit limit. So if you have balances on other cards, you may actually bump yourself up over 30% if you had been below 30%. So that's the type of thing that might be a good thing to ask a financial counselor about, that to get a second opinion before you close a credit card. Now, the next step is establishing new credit. And as you can see by the graphic, this is going to actually impact a huge range of your credit score. First way that you could establish new credit is by becoming an authorized user on someone else's account. Now, this is something you have to be very careful with. One, it has to be someone you can trust. Two, it needs to be someone who already has an established good credit record. Since you'll be as an authorized user, that means any of their credit history with that card will come over to your credit report. Now, it's up to that person on whether or not they're going to actually give you access to their credit card. They don't need to do that. They can just put you on as an authorized user. But be careful with this one. You can also get credit builder loans. These are offered by some credit unions, and they are kind of the opposite of a traditional loan in which you get money up front and then you pay it back. Here, you pay a certain amount each month, and at the credit union puts the amount in a savings account for you, and at the end they give you that money that's in the savings account. There are fees alongside it, but it is a good way to establish that regular behavior of saving every month for a certain amount of money. And finally, if your credit isn't to the extent that you can get a typical credit card, you might want to get a secured credit card. In this case, you're going to put down a certain amount of collateral, usually like $200 to $500, and that's going to be your credit limit. And then you will use the card just like any other credit card, and you will put charges on it and then pay those charges off each month. If you've been a good customer, most credit cards after 6 months or a year are going to return that collateral to you, and they will change it over to an unsecured credit card. So it's a great way of learning those good behaviors with credit cards and how to handle that credit. And number 4 is that you need to reduce inquiries. Now, if you're going to be getting a mortgage, for example, you want to try to get all of your go to all the different lenders within a 30-day window. And if you do, then it will count as just one inquiry rather than multiple inquiries. And if you're looking for a car, the window is a 14-day window. Now, obviously, you can't completely stop inquiries. If you need to buy a house, obviously, you have to have someone pull your credit. But if it's the type of thing that you've been to one store and they denied you credit, don't keep going back to the same store every week and hoping that they're going to give you a credit card, because every time you do an inquiry, it's going to hit your credit to some extent. And then finally, there's Experian Boost. Now, this is specific to Experian, and you can here report your rent, your utilities, cell phone bill, regular things that don't normally go on your credit report, and this may increase your credit score to some extent. They claim on average about 19 points is what they see. The only problem is this only impacts your Experian credit score. It does not impact TransUnion or Equifax. And then the final step is to deal with delinquent accounts. Now, the first thing is, if it's not accurate, please dispute it. This is going to be impacting your credit score. So if you don't agree with it, if it doesn't look right, dispute it with the credit bureau. You need to think about, how much longer is this account going to be on my report? Maybe it's not worth trying to pursue this if it's going to roll off your credit report in a year. You need to talk to your lender, especially if you're in the process of getting a mortgage. They may tell you that certain debt is okay, or they're okay with a certain amount of debt, but be specific. Ask them, what do I need to take care of in order to get this loan with you or to get this mortgage with you? And they'll let you know, and then you can work on those parts. Now, the big thing with delinquent debt is it's so situation specific, and it's different from person to person. So I would really recommend that this would be a great thing that we can help you with at the FEC, that we can look at your credit with you and we can come up with a plan as to how to best deal with that delinquent debt. Now, the big thing with building your credit score is to be patient. It didn't take overnight for you to be in the situation that you're in, and it's not going to take overnight to get back there. It's going to take time. So you have to work hard to make sure to build things up well, but it's still going to take time no matter what. But you'll see small increases over the time that you're working on it. And as you get those increases, hopefully you'll be able to get to that home ownership that you may be looking for, maybe that new car that you're hoping that you're going to get. Now, the Greenville Financial Empowerment Center is a part of the Department of Human Relations, and we've been in Greenville for many years, and we are here to serve the population of Greenville in a multitude of ways. First, we can provide reverse mortgage counseling, foreclosure prevention counseling. We can help with landlord and tenant disputes and fair housing discrimination issues. We have a home buyer education class, and we can also help with providing housing and finding housing for those who are homeless. Now, if what I said today sounds interesting to you, we would love to book a session with you with one of our financial counselors. Our sessions are about an hour long and they are free of charge. And we can, in addition to dealing with credit, we can also talk about building savings, working on budgeting, paying off debt, and having great banking options. If this sounds like something you're interested in, we'd love for you to give us a call at 467-7503, or you can book an appointment with us at greenvillefec.com. So we hope to hear from you. Thanks for joining in today.